Hey guys, my name is Ruben Dante, and today I'm kind of geeking out a little bit. And if you follow my channel, um, you know that I use Interactive Brokers and I'm a day trader for stocks, futures, forex, equities. I basically trade all the asset classes. I'll do a video on cryptocurrency pretty soon, definitely by the end of the year. And then the one thing I don't do is penny stocks. So if you follow this channel, thank you. And if you don't, and you are interested in day trading at all, then please subscribe because there's a lot of videos that I do for followers, only that I don't release out. Now, first and foremost, let me say that trading and investing the financial markets is very risky if you don't know what you're doing, like driving a car per se, and you can lose all or more of your capital. So nothing I say is a buy, sell, or hold recommendation. It's all just for trading, or just for educational purposes. So take it, as theory and, do with it as you will. Now, one of my favorite things lately has been trading options on futures and just options in general. So, it's been going pretty well and, well, really well, I should say. It's probably my favorite asset class right now. So I've been playing with the platforms because I'm a bit of a techie. I'm a bit of a techie actually. And something that I started playing with right now that I'm really excited actually about, and I think it's probably one of the most underutilized things on Interactive Brokers, is the portfolio, tool. Now, if you're new to Interactive Brokers and you just downloaded the platform, or near to options, I do have a video on how to set up Interactive Brokers, or Trader Workstation, the platform just like this, which is optimized for trading options. And then I have one that is optimized for trading just equities and stuff like that. So anyway, I started playing with this portfolio thing just now, and it's actually really cool, especially in my opinion if you're newer to trading something like options. Because, like, if you're newer, if you're buying calls, you're going long, or you're thinking that the stock's probably going to go up in value. And typically when you're buying calls, you want to give yourself room to be right. And that's the great benefit with options is that you can do that. You can give yourself a lot of room to be right. And when you're buying calls, for example, your risk is limited to how much you paid for the premium. So typically when I buy calls, I try to buy them as far out expiration as possible so I don't lose a lot in time decay. Now, as you know, with options, they have a few moving parts. I don't think in my opinion, I don't think they're difficult. I think when people say something is difficult is extremely arrogant, first and foremost, because they're instantly assuming that they're more intelligent than you or whatever, and it's just not. There's a lot of moving parts. They could have had a bad instructor. They could have had a bad experience. You just don't know. So in my opinion, trading options has actually been probably the easiest asset class to learn. Now, granted, I have extensive education, in equities and stocks and futures, equities, stocks, futures, forex. I'm trained in price action really well. I went to a private academy. I do think it's expensive to be cheap when it comes to your financial education. But back to the point about options, people that get started with options, it does have a lot of leverage, but people tend to say that it's difficult or it's tricky. I don't think so. And I think there's a lot of tools we could use to make it even easier to kind of wrap our mind around it. Now, something that I think is cool with options is that platforms typically tend to give you some form of theoretical scenario. Now, like I was saying, whenever I buy calls, for example, I try to go as far out in expiration because I don't want to lose a lot in theta, which is the time decay. And I have a video on the Greeks if you're a subscriber on my channel. So basically options are affected by theta, which is, the time decay, delta, which is the dollar value. So if you have a positive delta, that is how much the value of the options contracts will go up per dollar that the stock goes up. So for example, here I have an Apple contract that I bought yesterday. and it's up $82. You see the percentage change. Um, and here you see the delta. So essentially, for every dollar that Apple goes up, the options contracts will go up 58 cents times 100 shares, which is what you're controlling with an options contract. And then the gamma is how much above that the delta will rise per dollar. So if it goes up $1 in value, the delta will go up 57 cents plus 32 gamma per dollar. So if you are curious about the Greeks, I'm sure there's a ton of research you can do about how they each move individually. Back to this though, one thing that I realized is that if you're newer for trading options, there's a lot you can do to kind of see your progress and kind of reverse engineer your strategy. So, like I said, I'm highly trained in price action, which is essentially I don't really use indicators or fundamentals so much. I do use them here and there, but not as my primary methodology for trading. I can look at the candlesticks and kind of find where the unfilled orders are. If you follow Sam Seiden, he's pretty great when it comes to price action, and he's, you know, who I theoretically or at the end of the day who I learned the theory from directly and indirectly. So the cool thing is, like, for example, if you just bought a bunch of, let's say, calls, right? So I tend to buy calls, like I said, further on the money, and sometimes I buy deep in the money puts that are that give me some credit and then arbitrage because it's below my desired buy area. I'll do a video on that later. Maybe your margin is a lot more when you're selling deep in the money puts, but you're getting a credit. So here, for example, or let's look at some KMI. So what's really cool is that you can kind of see how the different options contracts have been affected that you've bought based on a lot of different metrics here on the portfolio tool. So for example, here's KMI, and then here's the 16 call for March, and then here's another 16 call. And what's cool is that you can kind of see how they've all changed, even though, so on long KMI, and like I said, I'm not telling anyone to buy or sell this. It's just a theoretical example for explanation purposes. But you can see that my 16 call is in profit. And you can see how much has changed, 22%. And then you can see how the other calls have kind of been affected, with the same stock. And, obviously KMI has moved X amount today. But you can see here how the different percentage, of the value of the underlying call have changed, quite dramatically, in value, based on the underlying call, which is whether it's, 19, 16, or 17. And this is not a great example, and I know that because they're different price strikes. But the theory or the example still stands. You can see how much each contract has changed in price today, by adding this onto the portfolio tool. Same with, and then you can see kind of how much delta dollars you're controlling. So, you can see how much it's costing you, how much delta dollars you're controlling. You can see that percentage change today. So even though I tend to sometimes buy calls really for out an expiration, I do have a mental threshold of where I'm willing to take profit. For example, PayPal, I bought yesterday, I bought the call, and I wish there was more details as far as like past performance, but I bought the call yesterday, and essentially today it gained 32%. So I made 32% in more or less 24 hours. So for me, I mean, I might want to take profit at PayPal realistically, if I was going to look at, where I would want to maybe put a profit taker at, it might be more or less, somewhere around here, like $77. I took profit, below, I took profit at 75. So I took profit below target. But the reason I did that is because the is PayPal going to go up again another 32%, or at least the contract? It might, but whether I take 32% overnight and make $90 a day, or, make $300 10 days from now, but now I made significantly less dollars a day than 90. So sometimes I just like to take my money and run. And that I base that, with options, a lot of time decay, and you're banking on time. So I base that on just, am I happy with the $90 a day? And what is the probability of holding the stock till target that'll have another 32% day? So again, I've studied a lot of different school of thought, and, just do your due diligence or research. That's not the point of this video. And I can make a video on time decay and the value. But again, all those things kind of depend on your goals. So it would be wrong for me to even say that is what you should or shouldn't do. Now, you can all see the last trading price. So it's great because you can kind of, let's say, click on Apple here. And you can go by, let's see, portfolio by security type. So like, I don't know, let's just go by title. Let's just do that. So portfolio, and obviously, guys, this is all the things you can kind of set your layout of your P&L. So you can do industry, you can do security type, you can do P&L, which is kind of what I had. And I like to know my P&L for the day. So this is another thing that's cool, because you can see your unrealized P&L, because this number can be kind of tricky. As are these. For example, like yesterday, I think I sold Nordstrom's options, and I made like 50% or so of the contract in about a week, if that. But the way I like to double check my real profit and loss a lot of times is just going to account and just kind of looking at the totals there. Daily P&L is based on how much is gained a day, but then there's how much you've lost in time. There's a lot of moving parts. So, but here you can see the unrealized profit and loss based on how much you bought it for and what it's valued at right now if you liquidate it. So I like to see that. And then, so if you want to organize them like that, you can do it by unrealized. If you want to do P&L, now clearly I have more losing trades open right now than winning trades, but that's because I like to take my profits and run. KMI for me, for example, which is Kinder Morgan, that I plan to hold for a while, because in my opinion, it's at a great buying zone. I think Warren Buffett just bought a whole bunch of it. Again, do your own research. But, if you look at the weekly candles, which is the largest time frame I have, it's at a great area of just, I'm happy to buy it here. But I'm also willing to hold my losers for a while, because how much is my margin here? Like $600? It's nothing. But if something has a huge winning day, looking at that percentages and unrealized, I might take it early. But so here's how you can sort them all out. Here's how many delta dollars you're controlling. Like I said, how much, the cost, basis, the last price, average price. So the way you customize this, like I said, this is a great way, in my opinion, to kind of measure your progress and your strategy, because you can kind of see everything that you're doing more or less, in a shot, and you can kind of see like, oh, I have, let's go by, portfolio by security type, or, no, let's just go by, underline, or, yeah, so just go by like Apple or whatever. You can kind of see what's working, what's not working. You can see your P&L. You can see how much margin it's required for you to control the position. And in my opinion, I want to make the highest percentage per day, with my account size, not so much caring about, that the actual dollar number, because, you can have a $500 account size. You can have a $500 million account size. So you always want to go off of percentages, in my opinion. So there's a lot you can sort, there's a lot you can organize, there's a lot you can reverse engineer, see what's working, what's not working. And anyway, with options, like I said, there's a lot of ways that you can there's a lot that the platform already does for you, like KMI, all of these are attached to each other, so I can just click options chain and, add, so you wouldn't want a 1 day to expiration. So I just want to go as far out. And a good example, and I'm kind of sad that I closed them out, but a good example of that is I've had a lot of things with the same stock, the same underlying strike price, but different expiration dates. And the sooner expiration dates lose a lot more money, very quickly. Even when they're both pretty far out, in my experience, so if I buy a January call and a March call, both at $16, from what I've seen, the January call will lose a lot more in value very quickly. Even though we're not that close, we're 50 days and then 100 days or whatever. But even whenever it's a smaller window of time difference, it still seems to be a significant change. But you can see all of that here, and then let's go out to March. And like I said, a lot of times it's expensive to be cheap. And buying options, a lot of things to consider. Is the delta worth? Is the option worth it, or is it better to just buy the stock? There's a lot of things to consider, but the platform does a lot of the work for you. Like if you want to do a vertical spread, or a put spread or whatever. So yeah, let's do that. So let's say I am more than happy to buy KMI at, $16 if it comes there. So then I can just sell the put at 16, collects 41 cents. But to protect myself from, if KMI goes bankrupt, I can just buy the leg right underneath. And then you can see the credit, and there's a pretty good 20 cents on this. I'll take it all day. So then I get a $16 credit, and it kind of tells you here, and I'll do a video on this specifically. But, the cool thing about options, in my opinion, is there's a lot you can kind of figure out and reverse engineer just with the platform. Again, I'm a bit advocate of training, but the platform does do a lot of it for you. So, I might do a video on this later. I might actually check that trade. But the way you customize that is you go to settings under portfolio, market data, and then you can kind of enter them. So you can do, unrealized. So for what I have it here, I have unrealized P&L, financial instrument, percentage change, delta dollars, cost basis, last, average price, delta. And if you want to add anything specific, you just go on here, you click delta. So I already have delta. So let's go to the Greeks. And then if you want to take something off, just remove it, and then to add it back on, then you just go realized P&L. You just click on that, you add it, you apply it. As I have it here, you can look at it. Obviously, unrealized P&L, financial instrument, percentage change, delta dollars, cost basis, last, average price, market value, realized P&L, delta, gamma. Okay, apply. So anyway, guys, that is all for today. I went a little over what I wanted. I went more minutes than I expected, but I think it's pretty good. For me, at least, I ramble. I'm getting better at saying and pronouncing the word chart. I know that really bothers you guys to say chart. So I'm working on chart and say it appropriately for you guys, because it seems to be a big bug. So anyway, if you like this video, follow, subscribe, like, in the comments below. If you don't like it, then don't follow or subscribe, obviously. And to reach out to me, it's way better on Twitter. It sounds, it is what it is, but to me, I see my tweets all the time. I don't always see my YouTube notifications for whatever reason. So that is it for today, guys. Happy trading. Be safe. Don't over leverage. Remember that trading is a very risky endeavor, and take anything I say as educational. Do not buy or sell anything based on what you see on my screen or what you hear me say. So thank you so much, guys. Happy trading, and have a fantastic rest of your day. Bye.